The fourth quarter has been a mixed bag for Canada's big banks. While RBC hit all-time highs following their earnings, Scotiabank managed to miss some analyst estimates and fell off the wagon this week. The latest earnings from National Bank, the smallest member of the Big Six, have followed Scotiabank's footsteps, with the bank missing revenue estimates but still managing to hit consensus estimates on EPS. We're nearly halfway through our bank earnings coverage, folks. Let's dive in. Okay, let's start off with the high level. National Bank for the fourth quarter of 2024 reported net income of $955 million, or $2.66 per share, a 27% improvement from the $751 million, or $2.09 per share, reported in the fourth quarter of 2023. Growth was attributed to a strong performance across all business segments. Adjusted net income actually came in slightly lower at $928 million, or $2.58 per share, although this was still a 9% improvement on a year-over-year basis. Analyst consensus estimates had called for EPS of $1.83 per share, meaning that analysts were extremely far off in terms of accuracy for the fourth quarter. This net income was derived from top-line revenues of $2.94 billion, a 15% improvement on a year-over-year basis, but still short of analyst revenue estimates of $2.95 billion. Return on equity for the quarter came in at 16.4% versus 14.1% in the fourth quarter of 2023. For the full fiscal year, National Bank reported total net income of $3.8 billion, or $10.68 a share, a 16% improvement versus the $3.3 billion, or $9.24 a share, reported in 2023. On an adjusted basis, net income amounted to $3.7 billion, or $10.39 a share, versus $3.4 billion, or $9.46 per share last year. And for those viewers that are trying to understand the size difference amongst Canada's big six banks, consider the fact that RBC in the fourth quarter alone reported a net income of $4.2 billion. Anyways, return on equity for the year sat at 17.2% versus 16.3% last year. National Bank ended the fiscal year with a CET1 capital ratio of 13.7%, an improvement over the 13.5% reported as of the end of 2023. Lastly, the bank finished the year out by declaring a quarterly dividend of $1.14 per common share, which represents a 3.6% increase. All right, on to the segments. National Bank reports their results across a total of 4 segments: personal and commercial, wealth management, financial markets, and U.S. specialty finance and international. The largest segment, as you can likely assume, is personal and commercial, which in the fourth quarter reported a net income of $327 million, a 21% improvement on a year-over-year basis. The growth is said to have been driven by growth in loans and deposits, which offset the impact of a slight decline in net interest margins. Wealth management saw even more substantial growth, with the segment seeing net income growth of 41% on a year-over-year basis, climbing from $155 million to $219 million. This growth was attributed to higher loan and deposit volumes, while fee-based revenues rose by 15% as a result of positive momentum in public markets, and transaction revenues climbed by 13% due to growing client activity. Financial markets grew less dramatically than its peers, pushing it into second place in terms of segment net income, following growth of just 8% on a year-over-year basis. Net income here amounted to $306 million versus $284 million last year. The growth was attributed to a mixed bag of lower overall segment revenue due to a decline in equities revenues from global markets, combined with a 32% improvement in interest rate and credit product revenue and a 22% improvement in commodities and foreign exchange revenues. Finally, the U.S. specialty finance and international segment saw growth of 8% on a year-over-year basis, climbing from $145 million to $157 million. All right, let's touch on the credit losses. Provisions for credit losses grew in the fourth quarter, jumping 41% on a year-over-year basis, with provisions climbing from $115 million to $162 million. The bulk of the provisions in the fourth quarter came from the personal and commercial segment, which accounted for $96 million in provisions, while the U.S. specialty finance segment recorded $63 million in provisions. For the full fiscal year, provisions climbed even more dramatically at 43%, going from $397 million in 2023 to $569 million in 2024. The bulk of it came again from the personal and commercial segment at $335 million, followed by U.S. Specialty at $182 million and Financial Markets at $54 million. National Bank oddly stated that the increases were in an environment characterized by a normalization of credit performance, which to the layman simply sounds like a bunch of jargon used to make a retail shareholder okay with the outcome, even though they didn't really say anything. Gross impaired loans, meanwhile, climbed to $1.7 billion, with net formations amounting to $340 million in the fourth quarter. This translates to 68 basis points of total loans versus 45 basis points last year. So let's wrap it up. It was another mixed bag quarter for a big bank, with the economic situation in Canada looking like it's starting to weigh on these oligopolies. Whether it gets any better anytime soon is up for discussion as well, with National Bank forecasting that the unemployment rate will rise by nearly a full percentage point on a year-over-year basis and that growth will slow in the markets. On the bright side, GDP growth is expected to get over the 1% mark, so I guess that's a win. As for National Bank itself, they are hitting current growth objectives in terms of both adjusted EPS and return on equity. Shareholders didn't really reward them for it, though, with the bank seeing their equity fall 3.5% on the day of the earnings release, putting them at a PE ratio of 13.4 and a dividend yield of 3.24 as per Google Finance. Royal Bank, the leader of the pack in terms of market cap, comparatively trades at a PE ratio of 15.7, with a dividend yield of 3.21%. All right, everybody, let us know what you think in the comment section. What do you guys want us to cover when we look at these bank earnings? What are your thoughts on the big banks? Is it a good time to go long? Is it a good time to go short? Should you just be sitting on the sidelines? What are your thoughts? Let us know in the comment section. Also, if you found this video helpful, please smash that like button, subscribe, and ring that notification bell. All right, everybody, thanks for watching.